We're going to have something like this, and then this low gets liquidated by the passive buyers. Boom, we get the mitigation to this zone and probably start going up from here. Do you understand now? Is this something you remember? The first move, just like the previous one right here, this one, the first move was by the aggressive buyers which came in. Okay, we're talking about the other picture, the first picture, this one right here. This one gives us a clear understanding of what is happening in the market. As you can see, the aggressive buyers came in to break the structure above before we had the passive buyers come to liquidate this B point. And this is a mitigation to the 70% of the range. And the C move is the aggressive move all the way up. This is just it's more like is quite repeatable, and it's more like a fractal. We call this a fractal, right? So if you are there with your notes, I would like to kick off with the lectures so we don't spend much time doing analysis. So I would like to start from the demand and supply zone, what the demand zone is and what the supply zone is. After that, we move over to why you need the supply and demand zones as traders. So what is a supply and demand zone? In trading, the supply and demand zone is a key price area on a chart where buying or selling pressure has previously been strong enough to reverse or pause price movements. Traders use these zones to identify potential turning points in the market. Number one, the supply zone. The supply zone can also be noted as the resistance zone, right? The supply zone is also the resistance zone. And what does it do? A price is a price where sellers previously overwhelmed the buyers, pushing price down, just like this previous resistance zone. And how does it form? Often after a sharp upward move, stalls and reverse leveling behind a cluster of price levels where selling interest is high. Now let's go over to this zone. We're practically talking about what happened here in the $13,000 level, right? What happened here? Price mitigated the supply or the resistance zone, right? And there was a sharp move which caused the reversal. This is the reversal. This is a sharp move because it mitigated a resistance or supply area. Now this area is where sellers' interests are high, right? And traders' behavior here is when price revisit this zone, many traders expect selling pressure to return, making it a potential short selling or take profit area. Buyers will likely take profit right here, just like the aggressive buyers will likely take profit here, and wait for the passive buyers to come in the market in the case of an upward trend, because the Bitcoin right now is trending up. But with that being said, for example, if price returns back here just like it did previously, this we have to map out the zones with the tool. You can use the rectangle tool. Now what happened here, price visited this zone, right? The first one was this and the second one was this. So after seeing this first move, you already know this is a supply zone or a resistance area. That is the case of a supply zone. And what is a demand zone? A demand zone is a price area such as this, where buyers previously stepped in strongly enough to stop a price decline and push it higher. Now, this is what traders' behaviors are around the demand zone. When price comes back to the demand zone, buyers often anticipate renewed demand, making it a potential buying opportunity, just as this. This was the first move right here. This made the first demand zone, and the second is this. So we already know, looking at this, this whole scenario, the first scenario, we already anticipate that the second time price gets to this level, buyers are likely to come in, and boom, it happened, right? That's for the example. Now, why does it matter? Why do we trade the supply or demand zone? To help anticipate reversal or continuation of trend. That's number one. Number two, to provide clear entry and exit points for traders. And number three is often aligned with institutional buying and selling activity, just like what we have here right now. Okay, so with that being said, we already have the basic move. You already know the three basic moves: the consolidation move, and the impulsive move. It's the two basic moves, right? Right here you see a consolidation. I told you the first scenario. The second scenario, you see a consolidation right here before you see an impulsive move. Now, I told you, according to an analysis, that because of this bearish impulsive move, the first bearish impulsive move, we don't see this retracement move lasting for the long-term traders, right? So this is our anticipation, and we're looking forward to it. Please, if you have any question pertaining this tutorial, I want you to drop in the comment section below, and I'll attend to every comment in the comment section. With that being said, that comes to the end of our tutorial for today. This is David. Thank you.